All right, guys, weekend's over. Back to work here tonight. It's Monday evening, after all. It's August the 3rd, 2020. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me because my job tonight is to help us find the best entry setups for tomorrow. That's Tuesday's trading session. And I got a jam-packed video in store for you guys and gals tonight. Charts are all ready, as you can see. Got the oil, got the E-minis, we got the gold on our radar. Lots of spike and range patterns to look at tomorrow, or for tomorrow's trading session. So momentum plays a factor, ranges play a factor, key levels of support and resistance outside those ranges. We're going to break all of these pieces down. I've got a bunch of great setups we're tracking for tomorrow's trading session. Before we jump in, though, and get our hands dirty tonight, boy, brand new day, brand new week, brand new month. It's so great to be here with you guys and gals. Before we jump in, though, and get started, I want to make sure to remind you, make sure you subscribe to this channel. If you haven't done so already, I hope you'll subscribe to our YouTube channel. That way you never miss all the good stuff we publish every evening on this video newsletter. And don't forget, if you have any questions for me tonight, drop those questions in the comment section below. We'll get those questions answered as soon as possible. And don't forget, if you tune in every evening, if you're like me, and you use this video to get your mind right and get those charts right for tomorrow, hit that thumbs up button for me. Always appreciate you guys tuning in, supporting our channel by subscribing, typing in lots of questions if you have any, and thumbs up if you like the content we publish here on this video. But enough of the intro. Let's get this party going. We'll get a lot to cover here in this video. We got the calendar, the charts. Let's grab it. Let's grab that calendar and let's take a look at the schedule here for tomorrow as we go into this first week of August. Boy, oh boy, I can't believe we're 8 months into this year of 2020. It has just flown right by, hasn't it? Now, of course, as we look at the week ahead of us, we know, first of all, it is the first week of the month. That means Friday's non-farm payroll report is the big news of the week. So everybody, about Wednesday, Thursday, and Friday, as we get into Wednesday this week, you're going to start hearing a lot of people talk about that employment number coming out, right? That'll be the employment number, not for August, but for July, right? It's a lagging number. So the numbers of new jobs coming out in July is reported that first week in August. That is a big, big news report. And we'll definitely start to see the markets most likely start to gear up for that after Wednesdays, right? So probably on Wednesday night's newsletter, we'll start talking about getting ready for Friday morning's 8:30 non-farm payroll number. So keep that on your radar later on this week. We also know we are winding down earnings season. Last week was kind of like the fever pitch of earnings, and we're starting to wind down here. We get a bunch of pharmaceutical companies. You know, there are a bunch of companies you will recognize, but definitely not the names that we saw last week. So, you know, dare I say, a little downtick in volatility might not be a bad thing. We saw some pretty crazy markets last week. So, yeah, I wouldn't say a huge downtick in volatility, but definitely not the fever pitch of earnings, the climax of earnings that we saw over the last couple weeks. So we're kind of winding down earnings season. So be aware of that. If you are trading before the open or after the close here in the U.S., just please be aware, especially markets like the Russell, the S&P, the NASDAQ, right? Obviously, those will be the most susceptible during earnings season. So be aware of that. We do expect to see some pre-market and post-market activity because of earnings season. Looking at the big headline news here for this week, we're obviously through Monday. The ISM number was by far the big number for this morning. It was a pretty good-looking number, too. 54 was showing expansion, a very strong manufacturing sector, according to the ISM manufacturing. But as we look at tomorrow, there really isn't a lot on our radar tomorrow. We get the factory orders, of course, at 10 o'clock Eastern time. You know, and honestly, that sounds like a pretty big news report. It doesn't usually move the markets that much. What is more likely key is just that 10 o'clock, which we call the 10 o'clock shock. We've seen a lot of the biggest moves happening in that 10 o'clock to 11 o'clock block. So even though I don't expect that factory orders to be the reason, it definitely won't be a bad thing to be making sure you're at your desk tomorrow for that 10 o'clock to 11 o'clock block here. As we get later in the week, we go into more ISM on Wednesday. That's the big news on Wednesday. Thursday, it's all about jobs, right? And of course, on Thursday afternoon, things will slow down ahead of that Friday non-farm payroll number. So again, first week of the month, all eyes on employment numbers later on in the week. We'll start worrying about that on Wednesday. Earnings season, be careful in the pre-market and the post-market. Tomorrow, factory orders, 10 o'clock Eastern time. Now, don't forget, we will be in our trade room like we are every morning at 8 o'clock Eastern time. So we'll have plenty of time to get a front row seat for that 10 o'clock to 11 o'clock hour. Hopefully, we'll find some pretty good setups before that 10 o'clock hour. But, we always come out. We do our best. We see what the market gives us. Lately, though, right, it has been better to wait a little bit later on in the sessions. That's on our radar for tomorrow. And then it'll go, of course, we'll stick to that 10 o'clock kind of block on Wednesday, 8:30 on Thursday, 8:30 on Friday. So busy week ahead of us. Now, obviously, too, a lot of people are talking about stimulus right now. Remember, this coronavirus is really starting to wreak havoc now. It's not just the second wave here in the U.S. It appears the second wave is starting to grab hold of other places around the world. So if you were being affected by that right now, please stay safe. Please stay safe out there. My thoughts and prayers for everybody being affected by this stuff. I know it's not easy here right now. We're going through it right now here in Los Angeles. And of course, stimulus, right? Stimulus is a big variable on our radar right there. These are kind of the two big known unknowns this week. We saw some very promising numbers out of, I believe California saw promising numbers. Florida saw promising numbers. The problem was they closed their testing stations. And of course, as President Trump here in the U.S. kind of joked around about by saying, we can have less cases if we stop testing as many people. He was obviously joking about that. I'm pretty sure he was joking about that. The news media tried to make it sound like it was a horrible thing. But the reality, though, is it's tough to tell, right? Anybody who's looking at those drop in virus cases, again, a big chunk of them were taken out, most likely because there's a hurricane, right, bearing down on the east coast of the U.S. right now. So I think I'd be lying to you right now if I said I was getting excited about this second wave winding down. I think everybody's kind of holding their breath a little bit right now to see how that's going to work out. That is going to be something we're watching here this week. And then, of course, stimulus. We've all been told we're going to hear something soon. Both sides of the Senate right now in Congress, they're fighting back and forth about stimulus. Will we hear something this week? Apparently, they do agree on some items, but they're still hung up on some other items. So hopefully they'll get that figured out. And once they do, whatever that headline looks like, that will be one of the biggest market-moving events this week. So those are the big known unknowns, right? How much will this virus, right? Will this come roaring back again? I hope it doesn't. I really hope it doesn't for all of humanity's sake, right? Or will it start to deteriorate this week here, and will we hear more about that stimulus plan? So now we get a good bird's eye view here of the week. I think we got a pretty good grip on what to look forward to here this week. Again, early part of the week will mostly be the ISM. Later part of the week will be the employment number, and everybody be watching those tallies for the virus count and listening in for more stimulus. All right, let's keep this party going here. Got some charts ready for you guys. Lots of spike and range patterns. Lots of them here today. All three of these markets. S&P has a spike in range. Oil is a spike in range. Gold is a spike in range. Now, we see a lot of these. These are pretty common. We got a big bull market up right now into a trading range. And when it comes to a bull market into a range, it's a pretty simple, straightforward strategy. There are really two ways to trade it. One, I want to trade underneath the range using what I call seller failure patterns. They look like the letter W underneath that range, right? So we'll look for failure patterns, basically breakout seller failures. And then as we go higher, there are two ways or two breakout patterns that I like to use in my trade room. One of them is a 1, 2, 3 breakout. I don't ever try to predict the breakout. I don't like the breakout pullbacks. I wait for that 1, 2, 3 breakout. Then I'll mark up that high. I'll mark up that low. And I always look to buy that first test off the low of that channel. We call those 1, 2, 3 breakouts. The next breakout pattern is called a 2-try breakout. It's a very strong move higher, a shallow pullback, which barely touches the moving average, a higher high in price, and a trap below that low. That's called a 2-try breakout. So, really my job is relatively simple in tonight's video. Most of these markets are going to abide by or going to fit into these 3 buy patterns. Now's your chance to pause the video though. Grab a screenshot if you want to have this ready for tomorrow. And obviously, we'll be in our trade room tomorrow morning at 8 o'clock Eastern time, which reminds me, if you want to come out and trade this stuff with me tomorrow, I'll put all of the membership information you need to get access to our trade room. I'll put that right in the description of this YouTube video, right? So grab that and definitely make sure you come out and join us tomorrow, 8 o'clock Eastern time. But let's not waste more time. Let's jump in. Let's grab the S&P here first. And so as we jump in here this morning, or this evening, I should say, right, we get that big, strong run up. And it's basically just a big spike in range, right? It's a big move up into a sideways movement on the chart. And, whether or not you want to call the range a little bit bigger, a little bit smaller, I think this range fits pretty well. You can also see it's probably going to be seen also like a spike in channel too. You get this, right, higher highs, these higher lows. I like this spike in channel. This spike in channel is a pretty cool clue as well. So, there are two kind of main components here for this chart here right now. Both of them, by the way, tell me to be a buyer in the same location pretty much. A spike in channel. Spike in channels are very common patterns. And what you want to remember is about a spike in channel is that most spike in channels are going to pull back nice and deep into the base of that channel. The sweet spot on a spike in channel is not trying to buy high, it's buying nice and low. That's usually where the easiest money is going to be made in a spike in channel. So we spike up, we go into that channel, think about where the base of that, right? Think about where the base of that channel is. Right, and that's where you want to be looking to be a buyer there. So if I draw in my channel here now, you'll notice right where that puts me. Right, there's my spike up there. Right, that puts me right down in this area right there. So this is going to be the area. If I had it my way tomorrow, that's where I want to be buying here tomorrow. And then of course on top of that, you can also see that range. And so what's the most thing about a range? Get underneath the range and use those seller failure patterns, right? Those W patterns. So you can see here, that's that whole area down there. If I had it my way, I'd be buying 32.78 and a quarter, or buying setups off of that 38.72 and a quarter here. And you'll notice here, we've got a trend line down here. That's a great clue. Got a bunch of swings marked up. This is a great level right here. This 32.73, right? Great, what we call a reversal line. So lots of really great opportunities here. What I'd like to do is I'd like to get us to make a run going lower. And if we could get this thing going lower here, I'd like to get some sellers to come in, try to get short off the moving average. Right? If this thing takes off to the downside, we might get some bears that may think this is a reversal. They may try to sell short off of the EMA pullback, and that allows me now to buy right into the stop losses, right, of those counter trend breakout sellers, right? It's a bull market. It's not a bear market. So when sellers are trying to sell, first of all, it's against the trend. When they're trying to sell a breakout, right, it's against the range, right? Remember the range, whenever we have a range on a chart, a range is a magnet. If you were to put a volume profile on this, a volume at price, all of that volume right now will be piled up right in that location. So if you do study volume or any type of auction market theory, such as market profile, you know that when the market goes down, it's going to probably go right back up, right? It'll go back to value, as they say, right, in the most popular kind of market profile trading books. Now, you don't need market profile to trade this stuff. You just need to know how to find a trading range. So my ideal setup is I'd like to get us down below that range, get into some of these support levels, get those bears, right, to try, get short and fail. We can start buying off of those stop losses. Now, I do want to skip the middle. I really don't want to trade the middle. The middle is always going to be a very unreliable spot here. But what if the market tries to push higher? Where do we think the market wants to go? Well, we definitely have a round number up there at 3,300. Okay, I mean, the round number will be important, but if you want my opinion, we are now within striking distance. It's a little bit further up the ladder here. Where is it? It's up there somewhere, right? I'll have to grab a slower time from here. But we're within striking distance now of those all-time highs again. Now, the NASDAQ already did it, but you have to be thinking a lot of these buy the dip buyers right now are starting to get their eyes right on that on those all-time highs again here. So as we break higher, things may start getting pretty juicy here. I think where they're going to be hunting for, though, in the short term is that measured move. Strong move up, double that one up here. There is likely where that target will be if this thing can push higher here. Now, remember, there were two breakout patterns I'm looking for, right? One of them was a 1, 2, 3 breakout. Mark that high, mark that low, by the low of that channel, right? First test is the best test, right? The second one was a strong move up. Now remember, this one has to be a very strong move, a shallow pullback, a higher high, and a trap low, right? Strong move up, shallow pullback, higher high, and that trap low. Does that make sense, right? Those are two patterns that we talked about earlier. It's called a 1, 2, 3 breakout is the first one, or a 2 try breakout, right? So seller failures below the range, one failure, and of course, 2 breakout patterns. Now, breakout patterns are all about patience, and they do take some practice. So what I definitely would encourage you, if you haven't done so already yet, is make sure you grab our free trading classes here at School of Trade, because as part of the free trading course, I talk about failure patterns, but most importantly, I talk about those breakouts, those 1, 2, 3 breakouts, those 2 try breakout patterns. Grab that link that just popped up there. There's a little link that popped up there. Grab that free trading course. You're going to love that free course because you'll learn all my favorite setups, including my favorite breakout patterns, my 3-step strategy, and I'll send you hundreds of examples of how we apply that strategy to our favorite markets. So definitely grab that free course. And again, as I mentioned earlier, we're going to trade this stuff together tomorrow in our trade room. So don't be afraid to grab the link in the description and just come out and join me tomorrow and do it with me. All right. So grab the free course. That way, at the very least, you can learn these setups, right? And then that way, when we come back next time, you'll be able to really kind of visualize what those patterns are when I say a breakout pattern or a failure pattern. Now, how do I sell this market right now? We've talked about the buy side. The buy side's pretty straightforward. How do I sell this thing? Well, first of all, can I call a top right now? Can I try to sell here? No, we're not at a turning point yet, right? The only time I want to be a seller in a bull market is when I have completed a major objective. And so with that big, strong run up, there's still plenty of work these buyers have left to go. Now, if I find myself up at the measured move, right, and we start slowing down, okay, now I can start looking for things like a crown reversal pattern, and I can start to try to call that top, right, but not quite there yet. I'm not quite there. I'm not quite convinced these buyers are done yet, just because, again, we're not at a major turning point. We haven't completed, and whenever I see a big, strong move like that, I have to think those buyers have one thing on their mind, and that is to get that measured move. So I'm not really in the market right now to be calling a top on this. What I could easily see, though, is a collapse back down if these buyers run out of bullets. So if we do see a pullback, and if these sellers can actually hold that pullback and jump off the moving average, what do we call that? We call that a 1, 2, 3 reversal. At that point now there's a big bullseye right on that low of day. Now I have momentum on my side now, and now I can mark that low. I can mark that high. And remember, first test is the best test. I'm looking for that 1, 2, 3 reversal into a hidden channel pullback. Again, remember, very important, I'm not trying to sell that first pullback, right? That first pullback going lower, that's the one I want to buy into, right? That first pullback is likely going to fail. So if it does hold, good for the bears, but I'm not going to try to predict them holding here. If they do hold, mark up that low, mark up that high, and now we know exactly who has control and just a much more reliable entry pattern. So, there are times where you can call a top in a bull market, but unfortunately, we are not quite there. Maybe we are, but there's no real signal yet. There's no real sign of that coming, at least from what I can see here this evening. Now, don't forget, grab that free course. If you haven't done so already, pause the video if you need to here. The S&P is looking pretty straightforward here as we go into tomorrow. How about some oil? Now, oil is very similar to the S&P, but there's one really big giveaway on the oil, and we'll talk about that in a moment. What do you know about oil here right now? What do we know about oil? We know that oil, very important, right? Had that big range last week, if you recall, right around $40 a barrel. So no real surprise there, right? $40 a barrel. That was a pretty nasty range last week. But then, of course, right, and maybe this is positive numbers coming out of the coronavirus stuff. Maybe this is new stimulus hopes. Tough to tell exactly what drove this thing higher here on such strength today, but a very strong move up. And you can kind of see, right, whether you want to call this an expanding triangle. I've got this as pretty much a rectangle here with double tops, double bottoms, and flattening price action. So I'm looking at this as a bull market into a trading range. Now, we've talked about bull markets, right, into a trading range. What's the goal? I want to buy underneath the range with failure patterns, or I could buy a breakout. And if the market does want to break higher, that will now tell us where that next, right, kind of where that next level's going to be if I bring it over here. So just kind of keep that in mind, right? That measured move, right? That leg up there, those are very symmetrical. So depending on how far we pull back, and hopefully we get a nice pull back down to that buy zone, that will determine, let's just say we pull all the way back into that buy zone, right? That will determine now that next measured leg, right? That'll be our next target as we go. So kind of keep that in the back of your mind here on this pullback, okay? So measured moves are definitely on our radar. We may not know exactly where the measured move will be yet, but we know how to calculate it if we need to. All right, we're looking good there. So I know where they want to go as they try to break. Now, one of the key components to a bull market into a range is to look for support levels below the range. So you'll notice I've drawn off that, what I call, it's basically an expanding trend line, right? A support trend line. I've also marked up these lows back here. And I'll tell you, this area right here, that 40-47 area, is a really active line there. You'll notice this is a very, for whatever reason, a very popular spot there at that 40-47. So if I had it my way tomorrow, this is exactly where I'd be looking to be a buyer, right around that combination, right, of that area. That would be probably the ideal location there, because you can see I've also drawn off of these highs, and you'll notice I chose to draw the trend line, the channel high, right, from this high to this high. And the reason why I did that is because that's the highest point. Right? If this first one, if that was the highest point, I would draw it off of that level. But since that's the highest point there, you want to try to draw it off the highest point. And you can see how it actually goes underneath it, comes back, hits it, and then comes back. So it looks like we're on the right track there. That then, of course, gives me what is really a very nice, right, support trend line, kind of a hidden channel there that all lines up with these areas. So we know we're bullish. We know we're in a range. I want to buy underneath the range, ideally at a level of support. And what's the big clue? Right? I alluded to a big clue here. And the big clue is the rotation off the high. That is the big clue. Now, let me go back to the S&P real quickly because I want you to see this. I want you to see how the S&P came off the high and then notice how it went back into the range again, right? And see how it gets all chopped up in there? What that does is that kills momentum. Right? It does. It kills whatever momentum. Momentum is basically flat as the market goes sideways. But if you look at a market like the oil, right? The oil goes up and then comes right back down again. Okay, what that tells me is we call this a full rotation off the highs. And what that basically means is that the market, at least at this point, it hasn't gotten stuck back in the range yet. Right? Momentum hasn't been kind of squashed. You know what I mean? Momentum, if it keeps on pulling back, is going to build speed. Right? And this happens a lot when it comes to ranges. You'll see a range. The market will kind of jump above it, and then it will start to roll over like this. And so you really got to be careful when a market kind of fake out breakouts the high and then rotates off of that high because that momentum coming down is really strong. Now, how does that affect our plan? Because if you recall earlier, I mentioned before, we look for those W patterns, right? They're basically seller failure patterns, right? Basically, it's a breakout pullback for the sellers that fails, right? At a support level below that trading range. So what does that do for our entry? Well, it doesn't do a lot, but it makes me pause a little bit. It now makes me want to use a slight variation of the entry, which is called a nested failure. And that is where the bears try once, the bears try twice, right? And of course, the term nested basically means inside, right? When I say nested, what I really mean by that is inside. It's like those cool little Russian nested dolls, right? Where it's a doll inside of a doll inside of a doll. That's where the term nested comes from. And basically, what I'm trying to do on this is try to play that momentum against them, right? Let all of those bears. So as we pull back into that low now, what's going to happen is, again, this momentum will be very strong. So as we pull back now, I have to expect a little bit more firepower from these bears. So what I'll do is I'll wait for one, I'll wait for two, and then I can look for the run going higher. Now, just be aware of this. A lot of times these, and again, we call them nested failure patterns, and you're buying right into those stop losses. A lot of times these things will really run, right? They'll really shoot. So you want to be looking forward to the breakout pattern on the other end, right? So imagine it goes one strong move up, two, and you know what I mean? 1, 2, 3 breakout, 1, 2, 3 breakout pattern, mark the high, mark the low, and of course, first pullback. So you can play that momentum game right against them. Right? If they want to give us a nice deep pullback, well, think of it as a slingshot, right? So once those bears, they try once, they trice, and they realize did I say trice? Trice, apparently. That's a 2.5. Apparently trice is 2.5. They try twice, and then we go running higher here. I almost bit my tongue on that one, right? They go running the higher there. Again, you want to stay out of the middle. But again, think about that momentum, right? Think about that momentum running. And as that momentum swings, we can now look for that breakout going higher. So that's kind of the big nuance, at least that I see here for tomorrow. Now, keep in mind, too, if they go off that trend line and right back up in again, right, and we start going sideways here now, what does it do? It pretty much squashes that momentum. Now what I'll do is I'll keep that trend line, I'll add a new swing here, I'll increase my buy zone, and now we look for that strong move down, or at least a move lower, into support. Again, into support, look for those bears to try to get short, I dare you, and buy into those stop losses, right? This pattern right here will look a lot like that pattern right there, right? It'll pull back. Obviously, it won't be as dramatic of a pullback, right? It'll pull back. The bears will try. You'll know exactly where their stops are, and you can buy right into those stop losses. So those are two scenarios that I want to make sure I'm ready for, and of course, make sure that you are ready for here as well. And again, if we sit inside the range, we sit, right? We sit, then wait to get down here, wait for that seller failure, and buy into those stop losses as we go. Now, obviously, a breakout is possible. As we talked about earlier, 1, 2, 3. So we do know where, if it does want to keep going, right, we assume that's going to be a big milestone here for us. So if we do get that breakout, that's where they're going. You can just get rid of this here for now. Right, so if we do get that breakout, that's where they're trying to go. 41.98 is a big top there for all you oil bugs out there. So how to the breakout? Breakout pattern, 1, 2, 3 breakout. Mark that high, mark that low. First test is the best test, or a strong move up, a shallow pullback, a higher high in price, a trap low. I love those patterns. Very high quality patterns. Those 2-try breakout patterns. In fact, you can see one right here. Strong move up, shallow pullback, higher high, right, and trap low. See what they do? Right? They're waiting down there. That's the pattern up here. Strong move up, shallow pullback, higher high, trap low, and go from there. What is very important though is again, we get through those highs, right? Get through those highs. Show me some momentum, because as of right now, we are at that measured move. Now, once again, how do we sell this market? How do we sell this thing? Well, you definitely could justify that we were at a major turning point. Right? So you could look at this as a place to go up. Look for a 1 try for the bulls, a 2 try for the bulls. That's called a crown reversal pattern. Right? So again, you do want to make sure you incorporate that off of those major highs. So keep that on your radar tomorrow. My favorite way to sell a bull market never involves a reversal or a predicting reversal. It involves a strong move down. Buyers come in, right? They hold that pullback and they jump off the moving average. If they can get that going, mark up that low, mark up that high, selling that first test off the high of this channel, right? What is that called again? It's called a 1, 2, 3 reversal pattern, right? 1, 2, 3 reversal. Where do you think our objective is? Yeah, back to 40. Absolutely. 40 is a good number. If I had to guess, though, if we can get to 40 tomorrow, if it really collapses like that, keep your eyes on that 39.58, right? Remember, momentum. If they go all the way back to 40, it'll probably continue here right into the lower part of that trading range. That 40, though, will be a pretty easy magnet here for us. So pretty simple plan here on the oil. The biggest clue right now is that rotation off the high, right? 1, 2, and go. Or do we get stuck inside the range? Then we can be a lot more aggressive, right, on this thing, on that shallow pullback from there. Only time will tell. Looking forward to, and I should remind you too, we are watching that hurricane. Now it's a little bit early to tell right now how much that will affect us. They're saying the next couple days though, we'll know more about whether or not this hurricane really needs to be taken seriously. That might be the reason why this market spiked up here pretty good in the pre-market. But we are definitely tracking that hurricane right now. It is a bit ahead of schedule. We usually get these hurricanes, in the spring. So this is a little bit of a different time of the year to be seeing a hurricane, but hey, always a good time for a party with a hurricane in the oil futures market. So we'll definitely be watching that closely as well. That is probably another known unknown for oil traders here this week. But let's keep going though, right? Got the oil all set to go here. How am I doing so far, by the way? Any questions so far? Don't forget, type those questions right in. Post those questions right in the comment section below. I hope that you've hit the thumbs up button from now. And if you haven't done so already, I hope you've grabbed a copy of that free trading course that we can learn right along with me here every night on this newsletter. All right, gold. All right, I saved the best for last. Well, maybe the hardest one for last. Gold is probably going to be the more difficult of all of these markets here for tomorrow. We're talking stimulus this week, right? So anytime you think stimulus, you got to be thinking gold, right? Printing money, the US dollar. So gold could be a little bit squirrely right here this week, that's for sure. So as we go into this kind of stimulus week here, it's actually a jobs week, but stimulus is going to probably steal a little bit of the thunder here early in the week here. We know the market's bullish overall, right? Nice big bull move up into a trading range. And what's our job in a range? Our job in a range is to wait to get underneath the range, right, and buy below that low, right, with a seller failure pattern. Our job is to wait for those 1, 2, 3 breakout patterns, right? 1, 2, 3 breakouts. Our job is to look for those 2 try breakouts, strong move up, shallow pullback, higher high, and that trap low, right? So those are the key components here on this gold. It's overall bullish. That is pretty clear to see, right? Technically and fundamentally, really. It's tough to be a seller on gold right now when everybody's talking about stimulus, right? And of course, the dollar index keeps on pushing lower here. So it's definitely difficult to be a bear on the gold right now. So we do want to be buying at support. And from what I can tell, the best support levels underneath this trading range are right here, right around these lows, and the pendulum swing. And that's probably going to be the big clue here. That's probably the big clue here for tomorrow. And that's kind of one of the big nuances of this is we're coming off of that big rotation, right? Now, it doesn't look like momentum is still that bearish right now, but anytime we have that big of a rotation off the high, we do know the window is wide open for a big rotation off that low. So we do want to be aware the sellers are going to be trying to finish off that pendulum swing, and I really have to be aware of that as the market tries to go lower. So with this move higher and this rotation off the highs here, all of that momentum, you can see the bears have tried once. They're going to probably try again, and if they are successful, we may end up all the way down to that 1966, 1967 area, and then have to make our way back up from there. So that is the big variable here. Now, at the same time, if they do not complete that pendulum swing, what does that tell you as the market runs higher? Right? What does that tell you? It tells you we are very strong as we're going higher here. So breakout patterns are definitely on my radar here for gold if we don't get that full range rotation. So the big thing here right now is I've got to get down inside this area, but I've also got to keep my eyes open for a really deep pullback. So there's really 2 spots to look for. One is right here and one is down here. If I get that relatively shallow pullback, I can look for pretty much a straightforward seller failure, right, into a long going higher. If I get that really deep pullback to finish off that pendulum swing, well, just like we talked about on oil, that momentum now is going to be too difficult. I'm going to have to go 1, I'm going to have to go 2, and buy up from there. Hopefully that makes sense, right? We talked about how a rotation like this can lead to a lot of momentum. So if it really starts to push lower here, right? If we really start to see this thing go lower, if it really barrels kind of into that pendulum swing now, that momentum will be very, very strong. It still is a range. And the range will still be a magnet. Don't make any mistake about that. The range will still be a magnet until we successfully what? Until we break free of that range. So once we get underneath the range, if it's a big, strong move down, what I'll do is I'll look for a 1 try for the bears. I'll look for a 2 try for the bears. I always like to draw a trend line off of those lows. Let them try once. Let them try twice. And look for that buy, right, off of that trend line. You can buy off the trend line. You can buy into stop losses. Also be aware, too, this one oftentimes will rip higher and give you a little trap underneath that range just before it finishes off that move. So keep your eyes on that one, too. Again, you can buy off the trend line. You can buy into stops, right, above the high of number 2. And then again, keep your eyes open for what I call a nested into a 2 try trap. We don't want to trade inside the range, right? Don't want to trade inside the range. See what happened back here? What happens is if you try to get too aggressive buying back into the range, it'll trap, right? And that's the type of pattern that you're looking for over there, right? So as it goes back into the range, again, I want to get that nice deep pullback. With that deep pullback does come a price, and the price is momentum, right? We're going to pay that price by waiting for the bears to try twice. And then once those bears have tried twice over there, now, right, buying into stops, looking for that rally, but we'll keep an eye out. Again, we call it a two-try trap pattern, very similar to that two-try breakout pattern. Okay, so that's kind of what my kind of home run scenario would look like for tomorrow. Nice deep pullback, bears try once, bears try twice, get down off that trend line, get down around that, right around that low, and buy back into it. Now, again, if you think about it, there could be a trend line coming off that low right there too, right? There could easily be a support level right there. And so I don't have any problem either if we go down to that low. At this point now, it won't be a very strong momentum move. The only challenge here will be I want to make sure I get that seller failure before we go back into the range, right? So if it does this, if it pulls back right away and goes something like that, right? If that's the way this market pulls back, now this is a classic example of where you're going to want to see a trap, right? You'll want to see as the market goes up, you'll want to keep waiting for those traps underneath that trading range. So that's going to be a little bit of nuance tomorrow. We'll do it together, obviously, tomorrow morning in the trade room, just in case you need some help on that. But the key is I'm looking for seller failures below the low of the range. If we run into a situation like this one saw where it kind of goes into the range, look for those traps below those lows, right? That will be your best bet to avoid buying inside that range. And again, if we don't get that full pendulum swing and this market really runs up here, okay, I wouldn't be surprised. I wouldn't be surprised if it does here. Now, what I want to see, I wouldn't call this a 1, 2, 3 breakout because the first leg happened inside the range. But if I could see a 1, 2, 3 breakout, okay, now I can mark up that high. I can mark up that low. I can look for that first test, right? Now, believe it or not, these patterns are really, really reliable because they have such strong momentum to them. 1, 2, 3, that momentum will really rip. And so I would like to get that first test right off the low of that channel, or a strong move up. And again, this is where you really got to have a strong move. On the 1, 2, 3 breakout, you don't really need a strong move as long as that follow through is very strong, right? As long as the follow through off the moving average is very strong. On a two-try trap, though, you definitely do need some strength on that. Shallow pullback, higher high in price. And then once you got that, you know the buyers are waiting just below those lows. All right, guys, so breakout patterns are locked and loaded. There's not much else up here if we keep on going higher, just because, of course, we're at all-time highs right now. So it definitely is difficult to project targets at this point. We'll know more once we see some more of the price action tomorrow morning. And speaking of tomorrow morning, don't forget to come out and do it with us. It's very easy to get registered. I'll put all of the membership links you guys need. I'll put all of that information, the description of this YouTube video. So grab the link in the description, get registered as a brand new member, and come out and join me tomorrow morning at 8 o'clock Eastern Time. Don't forget, I'll put all the links down there for the free trading classes as well. So grab those too. That way at least you can get learning this strategy. And don't be a stranger. Don't be afraid to call the office. Right? Call the office. We have a toll-free phone number there. You can always reach me via telephone or email. And if the phone isn't a good fit for you, check out the live support tool. We have live chat, right? We have live chat on the left-hand side, on the right-hand side, right? You can pretty much find live chat wherever you look here on our website. So don't be a stranger. Keep in touch if you have any further questions. Definitely make sure you guys subscribe to our YouTube channel. post those questions in the comment section below and get there early tomorrow. Get a busy day tomorrow in our trade room starting off at 8 o'clock Eastern time. As always, guys, I want to thank you so much for tuning in. Hope you learned a lot. Hope you use it tomorrow to earn a lot. And as always, I will see you guys tomorrow at the opening bell, 8 o'clock Eastern time in our trade room. If not, we'll do it again tomorrow night on the next edition of our nightly newsletter. My name is Joseph. As always, be well out there. Be nice to each other, will you? Be safe, be healthy, and be here next time. Adios, amigos. Bye-bye for now.